Buying a wonderful company when its trading price is below its true value is like being able to buy a dollar for 80 cents. That's why I've analyzed the top 100 companies in the S&P 500, and here are 3 of the most undervalued stocks in June 2025. Starting off with Morgan Stanley, ticker symbol MS. This stock is currently trading at $129 and its intrinsic value is around $195, which means it's currently trading around 34% below its true worth. Looking at the 200-day moving average for this stock, we can see that the price is currently above this blue line, which means we are in an uptrend, and that's good news for us if we are thinking about buying a stock. So does this mean we should go all in on Morgan Stanley right now? We could, but that probably isn't the best way to play this, because if we look at a similar point in the past around here, when the price was above the 200-day moving average and below the intrinsic value, we can see that it did initially go up. However, from there we saw the price plummet, and if you had entered there, you would have been stuck in a declining stock for a few months. If you have experienced something like this, then don't worry, it's a common thing that happens, but there are things we can do to avoid this. And the things we can do comes down to our entry and exit strategies. So when thinking about when to exit a stock, we can use some tools to figure out where the price could go up to before we see some significant resistance. And one of the tools we can use is called the Fibonacci extension. So I've just drawn the Fibonacci extension on the screen here, and these levels of the Fibonacci are levels where we can generally expect to see some resistance. So investors using this tool like to lock in some profits around these levels, which puts them in a good position to buy back at a discount if the price retraces from there. So based on this, what are some price targets where we could expect to see some resistance, and also where we might want to consider locking in some profits? The first area is going to be around here. This is $151.50. The level above this is going to be around here. This is $167. And the third price target for Morgan Stanley is going to be around here, which is $212. So as the price starts climbing up, taking some profits as the price gets to these key levels could be an exit strategy you might want to consider. So having an exit strategy like this will help you avoid getting stuck when the price reaches strong resistance levels like this, and to help us enter near the bottom of retracements rather than near the top of rallies, we can use another tool called Fibonacci retracement. I've drawn the tool here, and this is what it looks like for Morgan Stanley. And the way this works is when prices start pulling back, they tend to find support at one of these Fibonacci levels, and investors using this tool like to initially enter at the higher Fibonacci levels and dollar cost average down at the lower ones if the price continues retracing. This enables them to have an average entry price close to the bottom of the retracement. So based on this, where are some areas where we could potentially consider entering Morgan Stanley? The first area is going to be around here, which is around $125. It is a Fibonacci level, and we've also seen the price find support around here recently. If this level breaks, then the next level where you could consider averaging down is going to be around here. This is $114. And the third entry level for Morgan Stanley is going to be around here. This is $105. So initially getting in at the higher Fibonacci levels and dollar cost averaging at the lower levels if the retracement continues could be an entry strategy worth considering. So Morgan Stanley is the first stock on our list. Moving on to the second stock, which is Merck & Company. It's currently trading at around $81 and its intrinsic value is around $122, which means this stock is currently available at a discount of 33%. Doing something similar to what we did for Morgan Stanley, This is what the Fibonacci extension looks like for Merck and Company. Some levels where we could expect to see some strong resistance and where we might want to consider taking some profits are going to be firstly $118. The level above this is going to be around here, which is $130. And the third price target for this stock is going to be around here, which is $145. So again, locking in some profits as the price climbs up to these levels could be an exit strategy you might want to consider. And when thinking about the exit strategy, we also need to think about the entry strategy. And to do that, I've drawn the Fibonacci retracement. The first area where you could consider entering this stock is going to be around here. This is $77.56. And the level below this where we could potentially average down is going to be near the bottom of the swing low, which is $73.35. So entering and averaging down around these areas could be an entry strategy you might want to consider if you're looking to get into Merck and Company. So that's the second stock on our list, and you've probably noticed that I'm using technical analysis to break these down. Some people trade based on news, others focus on earnings, and then there are those like myself who stick to charts and indicators. There are lots of different ways to invest, but if you're wondering which strategy performs the best, the one that's given me the biggest edge is investing alongside key US politicians. Over the past few years, this approach has consistently outperformed everything else I've tried. When certain politicians make moves in the market, it often signals something bigger, and being able to track that has made a huge difference in my results. If you are curious about how it works, I've put together this free video that walks you through the exact strategy I use, including real trade examples and the returns it's delivered over the last 3 years. The link to this video is in the description below. Feel free to check it out if you want to see how powerful this strategy can be. Coming back to the third stock on our list, which is Goldman Sachs, ticker symbol GS. This stock is currently trading at $613 and its intrinsic value is around $932, meaning it's currently available at a 34% discount. And here is what the Fibonacci extension is looking like for Goldman Sachs. Some areas where we could see some strong resistance and where you might want to consider locking in some profits are going to be firstly around here. This is $742. The level above this is going to be around here. This is $824. And the third level is going to be around here, which is $1,062. So this is what the exit strategy is looking like for Goldman Sachs. Let's now take a look at the Fibonacci retracement for this to get our entry strategy. Here's how the Fibonacci retracement is looking. We can see that the price was initially finding some support at this Fibonacci level. However, when that broke, we found support closer to this dark green area of the Fibonacci before bouncing off strongly from there. And based on the recent price movements, here are some levels where you could potentially consider entering. The first level is going to be around $582. The level below this is going to be around here, which is $526. And the third entry point for Goldman Sachs is going to be around here, which is $480. So entering or averaging down around these areas could be an entry strategy worth considering. I will be making update videos on these stocks as the price gets to these key levels. So if you'd like to stay up to date, consider subscribing to the channel. Also, if you found this video helpful, consider dropping a like on the video as that helps out the channel a lot. And if you'd like to learn how to profit like a politician, the link to this free video is in the description below, so feel free to check it out if you're interested. It's also worth mentioning I'm not a financial advisor and this is not financial advice. Please make sure you do your own research and your own analysis before you make any investment decisions. That brings us to the end of the video. If you'd like to learn which quantum computing stocks are the best to invest in right now, feel free to click on the video that's currently on the screen. Thank you for watching, and I will see you in the next one.